All right, Ron Toy with the Ron Toy team at Cross Country Mortgage. I'm a local licensed residential mortgage loan officer here in Texas. I do a live every Monday for people who are in the market looking to purchase or refinance a home. I do this to help educate buyers, but also realtors and lenders so that they know some key data points to have conversations with their clients and partners. Add value. And so whether you use me or not is not important. It's mostly I want to make sure you're empowered to make a buying or refinancing decision. So if you have any questions, go ahead and put them in the comments. If you missed the beginning part, don't worry. I usually upload these to my YouTube channel a couple days or a week later, just whenever I get some time. So here to answer questions that you might have on the housing market. Is it time to buy? Is it time to refinance? What does the market look like going forward? There's been a lot of misinformation that's been communicated online and on different websites, but I go and study the data. And I made a post about this morning. The appreciation rate since 1942, the interest rates, like all of that is super important, but you guys have access to it as well. The Bureau of Labor and Statistics, their website is fantastic, has a ton of data that you can pull out. So you're getting it for yourself instead of listening to someone from Yahoo News that probably nothing against just college graduates, but if you don't have experience in the housing market, buying homes, selling homes, owning homes, and then projecting what you think that's going to happen, you end up looking silly when somebody comes to you with actual facts and data that's been aggregated for generations and shows you why you're wrong. And so here to answer questions. If you have them put them in the comments. Feel free to share it. Don't have to do a bunch of other extra stuff. This is just education. So let's get into this to where we're at right now. The bond market, we're up 3 basis points, which is good. It means that rates are coming down. We're in this weird range that's kind of just been vacillating between the last couple of days, waiting for this week that's coming out. PCE was great last week. And so if you should go to BLS, their website, and just if you Google PCE report July 2024, every one of and PCE producer confidence index, I think it is, or but then there's PPE. I'm sorry, PPI producer price index, and then CPI consumer price index. These are important reports that you should be looking at yourself, so you can see where the economy is getting hit for different price increases. But the good news is inflation is coming down. We're on track for the Fed's 2% inflation target. They're meeting tomorrow, which is going to be huge. That's why I wanted to have this conversation so that realtors who are on the call or lenders who are on this Zoom have an opportunity to reach out to their clients, a talking point. Sometimes it's, what do we call our clients about? Hey, just so you know, Fed's going to be having a conversation tomorrow. They're going to make their Fed rate decision announcement. Now, most people project that they're not going to make their first Fed cut yet, maybe more in September, but we'll see. There's always a chance. Now, if they did make a cut tomorrow, it'd be amazing, but more than likely it'll come in September. That Fed fund rate is the intraday trading rate between banks that they lend and each other borrow off of. It impacts short-term debts like credit cards, car loans, again, those types of things mostly, but the bond market for mortgages are also impacted by that because it's really looking at inflation. And as inflation comes down, mortgage interest rates come down. But this is something that if you go back on my channel and look back months ago, I've been talking about because like this every election year, you can go back and see 2016, 2020, every time there's always this weird nebulous range that happens because no matter which side of the aisle you're on, either side wants to look like the savior of the economy, right? And so one of the biggest impacts for regular people would be your home mortgage interest rate, right? Your ability to qualify and buy a home. And that's why it's so important for us mortgage loan officers and realtors to be out here educating the community because the thing is, we have to validate people's concerns. Home prices are up, but it's hard to deal with, but it's not going down anytime soon because the only time in our history since 1942 that home prices went down, it was 2007 through 2011, which we know what that was from. That housing crisis was due to greedy lenders, banks, institutions who completely let the guidelines turn into if you can fog a mirror, you can get a loan. And I had that on my post earlier. And what that was like back in that day, if you had a decent credit score, you could do like a stated income loan, right? You could say you made 500 grand, even though maybe you made 50, and they weren't checking documents. So then they would give you loans based on that. And it would be interest only balloon mortgages. And so all these people were buying way more properties than they could actually afford, way bigger homes than they could actually afford, with the hopes they could refinance out of that balloon before the balloon period ended. And back then, the entire mortgage was due, or you had this huge inflated payment. So it's much different than an ARM product. These are balloon mortgages, which are no longer a thing. So that part of time in history, 2007 through 11, is unique. It's a blip because we didn't have proper regulations in place. Bankers got greedy and hardly any were held accountable, but we did put new guidelines in place to prevent that from ever happening again. Plus, if you look at the statistics I shared earlier on my post this morning, the birthing rates, we know birthing rates per generation. We should have collectively seen that there was a drop in population or births 33 years prior to 2006, and that entire generation, Generation X, between boomers and X, there was 11 million less people born in that generation. So of course, we're going to have a potential issue coming into that time period when we built the most homes ever in history in 2006. And so I shared that chart as well. So that will never happen again. And how we can know what the inventory is going to look like is this is why I like to empower you. You can look up housing permits data for single family residences, and you can see how many permits have been filed, how many housing starts have happened, how many of them actually started construction, and housing completions. All of this data is tracked. And so it comes out, and then some economists will see a blip and then want to make a post to get engagement. Now, we all know now more how social media works. It's based on clicks and engagement. So if I'm telling you everything is going to be good, yeah, there's going to be some ups and downs, but don't worry, this is typical for the economy. For instance, when the housing data came out for June housing numbers, a lot of people on Yahoo jumped that there's a housing inventory buildup. It's building up, and it's making it out like that's going to be the first sign that home prices are going to come crashing down. But they didn't give you the full information. Every year at that time, housing inventory increases because people are their kids are out of school. They're starting to list their homes. So of course, inventory builds at that time period because it's the typical cycle for the market. But that doesn't give clicks. What gets clicks is to try to say the sky is falling, Chicken Little style, and get people to get engaged and get activated. And I hate that because when we're in an activated state, our logic and reasoning abilities drop. And so I help my clients, partners, and audience by giving them data so that they can get out of that emotional state and into an empowered state so they can make a decision that aligns with their current and long-term financial goals. It's important. Home ownership is one of the key pillars to building long-term generational wealth. 2/3 of the wealth we have in our country is tied to the equity in homes. The average equity position right now is over 60%. Back in 2007 and 8, when the crisis happened, the average equity position was less than 19%. People were over leveraged. Right now, it's the opposite. And it's at a point where when rates do drop some, which is more than likely going to happen towards the fourth quarter into the first quarter of next year, it's going to cause in a market where people have a ton of cash to overpay. And, right now, almost 30% of the homes listed are selling over list price. Wait till rates drop a little bit. Now, all of a sudden, it'll be back like it was in 2020, 2021, where people were paying 50, 100,000 over list price, competing with cash offers because there's just not enough inventory and to keep up with demand. And I showed this stat the other day. Even this morning, showing you formations, which is housing formations are people entering the age to invest in property, typically. which is about 33 years old, versus housing completions, homes coming to market that are complete and ready to purchase. Housing formations have outpaced completions significantly since 2015. So this is something that's been a decade in the making for this moment right now. And when you see private equity firms and hedge fund companies and corporations with a specific targeted plan to own 30 to 40% of the residential real estate in our country by 2030, this is terrifying. It should terrify everybody. And as a mortgage lender, I want to make sure that as many people as I can connect with get in and build their wealth, because it is going to be staggering. And that's the true situation. And as many people can buy, great. You get to enjoy the appreciation. Last year, home prices in the highest rate since 1980, home prices went up between 5 and 7%. If you're looking at a $300,000 house, 5%, that's 15 grand for that year. And so people are like, oh, I'll wait till I can afford to buy. What they don't count is what's opportunity cost. Because say you rent a house, right? How many, if you're in the comments, say if you put in the comment if you rent or own. But if you rent a house, average rent's, let's say $2,000, right? That's 24 grand for the year. So 24 grand, 2,000, let's call it a $300,000 house. If your home appreciates 5% that year, that's 15 grand. So the opportunity cost just between the equity lost plus the rent paid out, we're not even talking about principal balance reduction or tax savings, just the equity gain that you didn't get plus the rent you paid out, that 24,000 plus the 15,000, you're looking at nearly 40 grand in opportunity costs for 1 year of waiting. Buy what you can comfortably afford. If you're renting a 1-bedroom apartment or 2-bedroom apartment, buy a 1-bedroom or 2-bedroom condo, and then you turn that into an investment property later after 12, 24 months. And then you can use the equity you built in that property to get you in another property or pay off debts, but build your real estate portfolio. And versus, because if you're paying rent, you're paying a mortgage. It's not your own. But yeah, if you're just joining, I'm Ron Toy with the Ron Toy team at Cross Country Mortgage. I'm a local licensed residential mortgage loan officer here in Texas. Happy to help you. I'm here to empower people to make a buying decision or refinance decision. If you have questions, put it in the comments. Let me know if you're renting, how much you're paying in rent, and I'll give you some information. Ask me some questions. What are you hearing on the media? If you were thinking about buying and decided to wait, what was that conversation? What did that look like for you? And ask those questions for me, because I'm here to answer them and continue going. Things that are going to come out this week. I do this every week. I'm trying to figure out how a better way to do it, but I'm going to take my phone off the stand and show you my computer screen to show you the economic reports that are coming out that could be market moving. So let me do that. Sorry, it's kind of janky, but it is what it is. So let me flip this. There we go. All right. So you can see the economic calendar. Tomorrow, Tuesday the 30th, home price index good, consumer confidence, and JOLTS. The jobs report is going to be so important for the market. Obviously, I'll keep you guys posted, but tomorrow's going to be busy with the JOLTS. But Wednesday is huge. Look at all this that's coming out on Wednesday. ADP. ADP is usually a little bit more accurate than some of the other stuff that they come out with. The Fed rate decisions coming out. Powell's going to speak. This is always market moving, so I'll keep you posted there. But Thursday, jobless claims. Again, another busy week, another busy day that can absolutely impact the market. And then unemployment rate. This week's housing data and job data is going to be so important for the markets. Let me just show you where we're at and show you how to shop. So when you're shopping for a mortgage, you want to ask the person you're getting the quote from, what is the coupon that this rate is attached to? This is the coupon, the UMBS 30-year 6%. And what is the bond market price that it's at that time? So right now, the bond market price is 101.08. Why this is so important is if you call at different times of the day, this market could be different. So if you want to compare apples to apples, you want to ask, what is the coupon that this rate's attached to? And what is the bond market price? There's other coupons out there, but this is pretty much what everybody's looking at. The UMBS 30-year 5.5, UMBS 6.5, this one, and then this one. So obviously, hopefully the person that you're talking to has invested in their career, subscribed to MBS Highway, fantastic tool. We track everything, what's going on. So again, just to recap, if you're shopping for a mortgage or a refinance option and you're getting quotes from lenders, you want to ask them, what is the coupon that this rate is attached to? This is what the coupon would be, UMBS 30 or 6 or whatever that is. So when you call the next lender, you can make sure you're comparing apples to apples. The other question is, what is the bond market price that this rate is attached to? Here's the bond market price as of right now. This is important because if you call it a certain time versus another, you might not be getting accurate rate quotes. Now, let me show you what the markets look like over the last few months. Back in May of 2024, you see April, we're all the way up here. This is great. This means rates are coming down. You see, the higher this, the lower the rates. The lower this, the higher the rates. See how much it's vacillated though? And some of this is through corrections in reports, which is super important and why we have to have a rate lock strategy in place. Because sometimes you'll get with a lender, get a quote. If you're not under contract, they'll tell you a rate, but it's tied to collateral. So it might not be locked. But this is where you want to know, where are we at? So you can track it. What is your loan officer's rate lock strategy? Are they watching the market and economic information? I saved my clients tons of money because we waited to lock last week until the reports came out, and bam, look it went from down here at the lowest part of the candle all the way up here. This was fantastic. So part of the saving money for clients is just by watching the markets. I want to show you something that's really important. Let's go 2 year. So you can see just how much things have changed in 2 years. So we're over here. 2 years ago, bond market was all the way up here. Look at that, 104.5. So 350 basis points drop. That's why we're at where we're at in the markets. But we have a lot of room for improvement. And we're going to get there because inflation's coming down. Like I said, PCE came out. We're on track for the, trending towards the 2%. So it's going to be good. Let me switch the camera back to me. All right. So that tool is super important. And I highly recommend any loan officers out there watching to invest in it. It's expensive, but worth it because there's so many cool tools. But it's MBS Highway. Barry Habib's amazing. He's on all the Fox News and This Business and all of the news channels, been doing it forever. And his team put together some fantastic tools for loan officers and realtors and clients so that they get report cards for their areas they're looking in and all these other great tools. But just want to help educate you some of the stuff behind the scenes so you know what's going on. And because if you try to Google this process, there's so many layers. On average, there's 8 companies and 32 people involved in every closing. So there's so many intricacies to this process. That's why it's in the top 5 stressful things. Will AMC go back to 70? I'm not sure what you're talking about there on AMC go back to 70. Can you give a little bit more info? Sorry, I might be distracted, but thank you for the comment. Bro, Meta or Tesla? Neither. Index funds, S&P 500, invest in other things than Meta or Tesla. Let's see, going through the comments. Sorry if I missed them. I have wicked bad ADHD and I'm not the best with technology, so thank you for your patience. If you have questions, put it in the comments. Let's see. But yeah, happy to answer them. If you have ever talked with a loan officer or haven't and thinking about buying, put those questions in the comments. Not very many people ever get the opportunity to talk to a loan officer. I've been doing this 10 years. I'm licensed here in Texas. I help people here in Texas. If you're not in Texas, no worries. I can connect you with somebody that's in your state. There's plenty of fantastic loan officers on this app that are here educating people. Carlos Munoz, Cat Loans. There's so many good ones out here. Follow them, because this is the thing that's most important when you're looking at a loan officer. Is this should be a long-term relationship, not just a transaction. So do you like them? Do you get along with them? Do you like it when they call you? Are they providing value? Because if they're just order takers, they're just customer service reps, they're not giving you guidance that aligns with your goals and dreams. If they're not going deep with you, how many homes or doors is what they typically call in the business if you're starting to invest and have a goal of investing. How many doors do you want to own? What's your passive income that you're targeting? So that there can be a clear, concise game plan in place so that you achieve those goals. Because if you just want to and don't have a plan, you'll be lost. Should I buy a Harley Davidson even though they are Christ, being as they will give everyone. So the idea on Harley, life is short. Depending on your overall debt servicing and where you are in life, do you own a home? Before I would invest or buy a Harley, I would look at a couple of things. One, do I own my home? Not that it's paid off, but do you own a property? If yes, cool. How much am I investing towards my retirement? Is that enough to make sure that I am stable and secure in retirement? If that's also yes, and your debts are paid and you're feeling confident and you have some liquidity left over every month and you're like, you know what, I want a Harley. Great. Make sure you have good life insurance and go get you the Harley. Life's short. But if you don't have a home, don't buy the Harley. If you aren't investing for retirement, don't buy the Harley. Make that a goal to say, okay, I'll buy the Harley once I've paid off X debts, I have in a home and this, and put it as a target so you go after it. I love that life insurance. Yeah, good. Life insurance, but you never know. Somebody told me one time if you own a motorcycle, you're either going down, have been down, or about to go down. And it sucks, but statistical averages. I know I do not have the mental fortitude for a motorcycle because I am addicted to danger and bad decisions. And my wife is over here laughing because she can hear me back here because she knows I would die immediately. I'd be like, does it go 200? And that would be me, squishalaid on the road. So I just was giving you information based on where I would be coming from. I know I'm not mature enough to have a motorcycle. So my wife's mom, Donna, I have a Mercedes. She named my Mercedes motorcycle. So I got my motorcycle. It just has 4 wheels and a steel cage. But at least it has twin turbo, so I'm happy about that, and V8. I know that's the thing. It's so fun. Fast cars and fast stuff excite me. And so 100% I get it and I want it. And like, I need something that's going to govern me. So like maybe I get a moped and paint Porky the Pig on it and call it my hog. I don't know, but it sounds fun. It looks fun. In Texas here, we got insane drivers. I don't know where you drive, but Texas, people go nuts. And so uh, it's just a risk. I'm not against it. That's what I'm saying. If you love it and you want to get it and you have everything else set up, good. Go get you a Harley. Might look at renting one for a couple days if you don't have one already, but just to see if you really, really want it before you go ahead and get it. But there also, I would probably look at buying one that you can pay in cash, like a used one, so that you're not financing anything and staying out of debt. Just something like cars. I used to be all about cars too and spending a bunch of money and wanting nice things. And now I'm like, let me go find me a Ford Ranger. That's like, but do you know how expensive those things are? Especially if it's got like 50, 60,000, they're still like 20 grand. But I want a small little truck that's cash. And like, I'm done with my Mercedes. I love that thing. It was a 2013 E550 4MATIC, super fast, but I'm done with that. Give me a 96, 2001, somewhere in there, Ford Ranger with like I can put stuff in the back because I like doing DIY projects and flipping furniture and stuff on the side, just having fun. And yeah, car prices are insane. I remember back when I'm 41. I remember back in the day, you get a $2,500 first, easy truck, little car used. Not anymore. Not anymore. Now everything's like 6 grand, 8 grand. I'm like, what in the heck? How are kids getting cars these days? It's insane. But you know, eh, it is what it is, but there's a lot more technology. So that's awesome. It's just, there's so much fun stuff. But that's why I love talking about these and doing these lives because as a mortgage loan officer, I'm more than just a mortgage loan officer. I like cars. I like talking about investments and doing stupid shit and flying in dumb stuff. Like my barrier of entry for crazy is 0. Like I'm in immediately. I'm the friend that says, let's do this, get it. Oh my gosh, I would love to have that for my first car. My first car was a 1991 Chevy Cavalier Z24 with a 3.1 liter 5-speed. And I thought I was the shit. It was so cool. But, that was back in high school. And then I had a twin turbo Dodge Stealth and then a BMW 525i in high school. And I have some crazy stories about that. But cars are my thing. But I'm happy to, see, it all ties in to why I'm here. You got to like your loan officer. If your loan officer is boring and a dork and doesn't like anything you like, then why would you want to talk to him? Oh my God. Imagine if you still had it? Imagine if you still had it today. I will take a 68 over a new one right now. God. Absolutely. The funniest car I ever had was a 70, was it 73, 78? Either 73 or 78, one of those. Ford Pinto MPG. It was brown. My ex-wife, her dad found it on a guy who was going to give it to the junkyard, so we paid 300 bucks, and that car got me through 2008 gas crisis, and I loved it. Dude, everybody was like, "Oh my gosh, I haven't seen a Pinto in forever." Little I always used to 5 or 6 speeds, and this thing I think had 3 or 4. Like, I'm like, where the heck is the last gear? But yeah, I would, what I think would be really cool, King, would be like, imagine if people started taking old cars and bringing in some new technology, and making them, but then they're not $1,000,000. You know what I mean? Like, give me an old Gremlin and put a nice Tesla engine in it and make it stupid fast. Like, I'd be in that, and just would be funny, like an old AMC Gremlin or a Pacer or Pinto, just stupid stuff, and it would be funny. But yes, so it's fun. Thank you for sharing your first car and some of this other stuff. It's important, and now with interest rates on cars, it's insane. A Maverick, oh my gosh, a Ford Maverick would be so fun. Absolutely, like an old school one, Mercury, like Bobcat, like something silly that was cool back in the day, but maybe nobody sees anymore. Like, I don't remember if you remember those little AMC station wagons that were like, had a V8 in them, had no business being as fast as they were. I think they were called an Eagle. That would be hilarious. But my son, he is 20 and he is in tech school for the Air Force. He just graduated basic training a couple weeks ago. Oh my gosh, javelins are so awesome, especially with the side pipes on the bottom. Like, I'll take that all day. I know we've talked a lot about AMCs, but there's so many different brands that are so cool too. But you get some cool stuff for that. And but that's where, like, I'm a loan officer, does mortgages, but also love cars. And so happy to talk about it and anything, and especially the economy, because, like, again, I think too many people bought more home than they needed or really need, and right now feel trapped because their mortgage interest rate's like 2 or 3, and they're like, "Man, I can't sell until rates come down." Great, just be ready for it and prepare, but buy what you can comfortably afford that is easy, and so you can still enjoy life, and you can go get you a Javelin, or you can go get you whatever, a vacation home in Thailand, I don't know, and have fun. Life is too short to be strapped to your house. How buying a home is important, building generational wealth, because as you're making your payment, you're reducing your principal balance, creating equity, and through appreciation. My next home is going to be, yes, good. Or like, buy a one bedroom condo that's inexpensive, 70, 80 grand. Then you can use it on Airbnb, get passive income for it. When you're in town, you can sleep there, and now you're not paying rent. So when you can go travel the world and still have a home base and get the benefits of appreciation and forced savings through principal balance reduction. And you can find a good condo, no, I'm not sure where you live, but I showed a thing on my live the other day here in Texas where there's still condos in Dallas, like 75, 80 grand. My mother has a condo in Bahamas. See, so you know what it's like. They're great. And again, you have a home base. You have a small space that is easy to maintain. You don't got a yard. You don't got to deal with anything. You just have your house. Bam. Now you have a home base, less overhead, easily debt services, and you can go get you a cool travel situation and go see the country. Go have fun. I would add, if you have, well, your mom's got a condo in the Bahamas. Have you ever been anywhere outside, like in Europe and Asia and different countries like that? Because if not, 10 out of 10 recommend. Do that. Life, like I've said a bajillion times, too freaking short. Go have fun. Go see the world and what else is out there, and enjoy the food and adventure. It's too cool. But that's why I'm different than most loan officers. I'm not going to try to obviously I'll show you payment ranges with budgets, but let's talk about what your goals are. What makes you happy? I want to visit China and Thailand. I also want to visit both of those. I saw some stuff about the people going to Thailand for different, like, medical treatments and stuff, and it was so inexpensive, but it's gorgeous, and the cost of ownership is less there. Malaysia would be fun too. I want to go to Bali, couple of spots over there, and see it. I want to go to a couple of different spots in Africa too. I want to see Egypt. I want to see just everywhere. There's so many fun places. My dad was in the military, so I was born in Germany. Then we lived in Greece, then New Jersey, then back to Greece, and all over. And so I've had an amazing opportunity to see a lot of the world, and it helps to be able to connect with other people. Man, I would love. You ain't lying. I, yes. The other one, Kenya for sure. Um, Nigeria. Seen their ladies basketball team? Holy moly! But you're not lying. Yes, 100% facts. Absolutely. Everything. Just the sun, the whole thing when it hits them and it glows. I'm like, I get it why Egyptians had a passion for gold because it makes sense because when the sun hits the skin, it's like gold. It's like amazing. 10 out of 10, 30 bajillion out of 10, everything. So you're not lying on that. So far, you're pinpoint on cars and location of absolutely phenomenal God tier women. So absolutely. Thank you for sharing that. But man, there's so much information out there. Trying to not get too distracted because my ADHD. I covered the market, covered the bond market, covered important questions. Now making sure to answer questions in the live. King has been awesome in asking a bunch of questions. Let me make sure I didn't miss anyone else. Feel like I've answered everybody. If you have questions, put in the comments. I'm a licensed residential mortgage loan officer here in Texas. I help people, individuals, families, and investors get the financing they need to invest in residential real estate. Happy to answer questions about the market. I do this Monday mortgage market update every Monday, sometimes at 12, 3, sometime during the day. So follow, track it, come back. But this week is a super busy week with reports and information. Happy to share it. The last thing I'm going to leave you guys with, if nobody has any additional questions, is some things to ask your loan officer that differentiate. There's not much. One, do you charge a flat fee to originate this loan, or do you charge points? Because that's going to be the biggest difference between mortgage lenders. Do they charge a flat fee, or do they charge points to originate? Second thing you want to ask is, do you process your loans in-house, or do you subcontract that out? This is important in case if you're trying to negotiate for speed to closing. Because right now, if there's a competitive market and you want to be leading and not have to put in a bunch of offers to get one under contract, you're going to, hey, how's it going? You're going to want to ask that question because you might need to close in 14, 15 days to compete with cash. I'm based out of here in Texas and Dallas, Texas specifically. My office is in Addison. So it's a great question. But yeah, talking about people helping them be empowered to make a buying decision or refinance decision, but basing it on facts and data that we can get from BLS, Case-Shiller, the important places to where we're getting information and not just anything else. You offer services in California. So currently, I am not licensed in California. I can connect you with somebody in California and go from there. Cross Country Mortgage is phenomenal. It's one of the top 3 lenders in the country. We have loan officers that are licensed in every state. But I can give you some guidance if you have questions about California. I am licensed loan officer, and if I wanted to be licensed in California, all I got to do is take their CE. But I just rather delegate that out to somebody who specializes in it than dilute it with, me inserting it, because every state has little intricacies that are different. But what's your question in California? What are you running into? Happy to, give some input or direct you in the right place. Jeremy Fortier, he's in California, phenomenal lender, 10 out of 10 guy. Great. Do you have commercial or hard money lenders in your network? I do. I do have both of those. So independent from my work with Cross Country, I'm also in a networking group with investors in real estate and commercial real estate, and it's a private equity group. So happy to look at that. I have a client looking to buy a warehouse. Phenomenal. In California, absolutely. What I would say is shoot me a DM or on my profile, you can get my link to send me an email and I can kind of set you up with a great connection for your client there in California. But happy to walk you through it and make sure you're set up with somebody that's going to take great care of you. But yeah, if anybody has questions, feel free to put it in the live and go from there. Again, you want to make sure you're working with a loan officer that you connect with, because we do business with people we know, like, and trust. Ask questions when you're interviewing them, not just about the rate, because rate's important, but we're all close. Everybody is going to be within an eighth to a quarter. And then if we get, LEs, we can try to see if we can match it. Sometimes we can't beat the builder's lender because they're just be able to give 20 grand this and 20 off this and all these money that who knows where it's coming from. But if it's a regular comparing this lender to this lender, we're all close, give or take a little bit. Again, it goes back to relationships. Do you want to have a relationship with somebody that's going to help make sure that you achieve your long term in addition to your short term financial goals? Or do you just want someone who's going to take your order and invest zero into your homeownership success and treat you like a number? That's you. Great. There's options. Online123.com, whatever it is, you'll be fine. But owning a home, buying, selling is in the top 5 most stressful things a person goes through. Being with the right person can help reduce that and make you feel comfortable and confident. That's my goal, whether you use me or not. Ask questions, do whatever. I'm here to add value. Make sure that you're connected and empowered. But I usually do these for 20, 30 minutes or so, answer questions. Make sure I've done that. If you missed the beginning part, you can go check out my YouTube channel. I'll usually upload them there, and so you can catch the whole thing. It's important. I'll keep you posted with what's going on this week with the different economic reports and go from there. But yeah, it's going to be great. Tonight, if you are on this and if you signed up for the announcement that's coming out for future President Kamala Harris, I'd like to see you on that live. If not, I'll catch you later, but I'll be on that live tonight. Later.